Hello traders. The title of the video is Complex Elliott Wave Count Tips, Apple Stock Waves Technical Trading. We are recording this video today because a YouTuber with a difficult name, PMLN something, alright, did ask me to record to analyze Apple stock. Alright, this is what we're going to do today because it's a complex Elliott wave count. One of the reasons why the Apple stock wave count is becoming complex is because they have fragmented their stock. You remember a few years ago, Apple stock was very, very expensive. Now it's only $223. So they have consolidate, all right, they have consolidate their shares. So after the consolidation of their share, this has nothing to do with the consolidation market pattern. It's about somebody, if you have 1 million share in circulation before, you cut it down probably to 700,000. So is that what's happened? No, what they did, in fact, it's not a consolidation. They increase the number of shares, so by making it more more cheaper. So because one share before, so it's a fragmented. They fragmented their share, so they have many shares in comparison to before. So because of that fragmentation of the share, the price structure has changed. All right. So that's why I understand why that particular trader is asking me to review Apple stock again one more time. And this has a repercussion on the price structure. If you remember clearly, all right, few months ago, we say first wave, second wave, third wave, fourth wave, and we were talking about the fifth wave. That time, Apple stock was not $200. They were more expensive, all right? So after the fragmentation, it become cheaper now, but many share, more share in circulation. All right? It's a fragmentation of the share. So we were saying this is the fifth wave, and we were telling traders that we were expecting a correction for Apple stock before the fragmentation did take place. So the structure has changed. The price structure has changed. The company did not change. The business did not change, all right? But the price structure did change. Now, it's more complex, to count Apple stock waves, all right? It took me some time to see exactly what is happening here. So I'll tell you now what I'm coming out, what I've found. What I have found is this one here. So I'm going to use a reference point. So if you have been following us, you'll know what is called reference point. The reference point is relating to the stock market. In 2009, the S&P 500 has started a new trend. So because that's what I said to traders, if the wave count becomes complex, we will go back to the reference point. Those reference points can help us sometimes to decipher, to dissect, all right, to break down, the complex wave structure, all right. So try to ignore this session for now because you can see there are more data here, though you cannot see because of the movement of the Apple stock was around for a long time. We have the 2000 before we can see this session. Now we can't see because of the fragmentation of the share. So it has been around for some time. So there are few things missing now because of the fragmentation. So I want you to ignore the session on the left hand side of this pink vertical line. So we're going to start counting wave from the reference point 2009. All right. So this is the first wave. Now, if you were here, you'll be saying this is the second wave. And then you'll be saying this is the third wave. And then when you come here, you say this is the fourth wave. You will notice quickly that the fourth wave almost go into the session of the first wave. And probably you'll be putting a question mark on it. And you'll be saying this is the fifth wave. All right. A lot of traders will say that. All right. A lot of traders will say that. So if you ignore the distortion here. You see, right, you just touch it, which some trader can sell. You may say that, okay, this is the fifth wave. But again, there is an area wave violation, because if you say this is the first wave, second wave, third wave, fourth wave, and the fifth wave, there is another area wave violation, is that the third wave is now the shortest multi-wave. So this is not the third wave if you start counting away from here, because it is supposed to be the third wave, will end up being the shortest impulse wave. So we have an area wave violation. With that, we know that we have to review again our wave count. We cannot call this session here the third wave. All right. So what has happened here? Because before we were saying first wave, second wave, third wave, okay, fourth wave, and the fifth wave. We were here. We were saying 1, 2, 3, 4, 5 is the fifth wave. End of the multi-wave. We were expecting a correction. Now, fragmentation did take place. Price structure has changed. What is happening now? What is happening now is very simple. Is that we have, okay, all blah 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 behind here. First wave of a higher degree, second wave of a higher degree in red, and from here all the way up here, the third wave of a higher degree. All right, but it's the third wave of a higher degree is not finished yet. In fact, it will finish somewhere here. So I'll put it there. So Apple stock, the third wave of a higher degree is not finished yet. So what do we have here? We have the first wave of a higher degree. Oh, no, sorry, 1 second. I need to put another line, vertical line somewhere here. I'll color it also into pink. So between the two pink lines, well, in fact here, is the third wave, especially the third wave all the way here. All right? First wave of a higher degree, second wave of a higher degree. We are now in the third wave of a higher degree. Where are we now? We are now in the third mono wave of the third wave of a higher degree. So, first mono wave of the third wave of a higher degree is this one here. But the second mono wave of the third wave of a higher degree is a W, X, Y wave, corrective wave. It's a complex wave. So this section here, 1, W, X, you see, 1, 2, 3, 4, 5, what we were calling before the fifth wave of a higher degree. For our previous wave count, is now the X wave. And now 1, 2, 3, this is the S wave. This is the Y wave here. So first wave of first mono wave of the third wave of a higher degree from here to here. Are you with me? From 2009 to September 2012, that's the first mono wave of the third wave of a higher degree. All right. Then we have W, X, Y wave forming the second mono wave of the third wave of a higher degree. So between the two red vertical line, we have the W, X, Y wave forming, okay, the second mono wave of the third wave of a higher degree. We are now in the third mono wave of the third wave of a higher degree. So from here to here, place the vertical, it's not finished yet. Somewhere I'll put another vertical line there. I'll put color it now. Color it also into red. From here to the where we are now in the third mono wave of the third wave of a higher degree. That's where we are now. So it may go up a little bit more before coming down. So if it's coming down, or if it starts coming down from here, that will form, okay, the fourth mono wave of the third wave of a higher degree. Are you with me? Okay, we want to keep it short because this trader, particular trader, like a short tutorial. There will be short video, there will be long video, there will be 4-hour video, there will be 6-hour video, there will be 5-minute video. So that will will form the fourth minor wave of the third wave of a higher degree. And then we will have here the fifth minor wave of the third wave of a higher degree in green. So this is my wave count. So feel free to disagree with my wave count and let me know what you think in the comment section. As always, I will say to you, this is my wave count. But always do your own wave count. Compare it to mine if you disagree. If you are happy with your own wave count, stick with it. All right, you don't have to follow me. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell Apple stock. So this is what's happening now. So first wave of a higher degree, second wave of a higher degree. We are now in the third wave of a higher degree, expecting to go up more. But what is happening here? The third wave, wave of a higher degree. It's not 5 here, it's a 3. The third wave of a higher degree is subdivided into 5. And the second minor wave of the third wave of a higher degree is a complex corrective wave, W, X, Y wave. This is where a lot of traders are going to get into trouble because they may not see that. So, as I said to you, all right, when a wave count becomes complex, use reference point. 2009 is a reference point. 2003 is a reference point. 1987 is a reference point. Okay, so use the reference point. It will help you to see what's up, because the stock market was trending from 2009. Most stock, S&P 500, Nasdaq 100, are in a third wave of a higher degree since 2009. So the same thing now, after the fragmentation of the share of Apple stock, they break it down. It was big before, expensive. They break it down into pieces, having many shares. Has changed the structure of the Apple price structure. Now we have to review our wave count. Looking at the current price structure, this is what I've seen. Feel free to disagree with my wave count. Let me know in the comment section what you have seen, all right, and we take it from there, all right. So after the third wave of a higher degree is completed, all right, we will expect, okay, the real fourth wave of a higher degree, followed by the fifth wave of a higher degree. Right? One step at a time. So today, that's all we can say now. We leave it there. Okay, we are still in a third wave of a higher degree, and we expect the fourth wave of the fourth minor wave of the third wave of a higher degree, as the fifth minor wave, okay, of the third wave of a higher degree. So this is my wave count, all right? I'm on a monthly chart, by the way, all right? So if you have any question or suggestion, feel free to put in the comment section, and in due course, I will be recording another video to answer your specific question. At the end of the day, you see I have my pitchfork tool on the chart. If you want to make, and once you finish your wave count, which I told you before, we will refer to the price structure, okay? We refer to the market pattern, draw your channel, draw your trend line, project channel in the direction of the price, talking about market geometry, identify the hot spot trading zone, and flow with the price. You see, flow with the price. There is a trend line here, you see, flow with the price, and put area wave aside, all right, and just flow with the price. Is that difficult? It's not difficult, all right? So if you have any question or suggestion, please put in the comment section. And in due course, I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know, all right, by giving us your beautiful thumbs up. If you dislike it, please mark it down, all right. If you think this is an essential tutorial that can help other stock traders and any of the traders, okay, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Before we wrap it up, all right, okay, one thing I want to show you very fast, talking about Fibonacci extension and retracement, you will notice if you keep your eagle eyes wide open, I'm moving line. If you keep your eagle eyes wide open, you will notice also, this is an important point, that's what I want to mention. You notice that if you apply Fibonacci extension to the first minor wave of the third wave of a higher degree, you see that the S wave did stop at 138, can you see, 138.2% Fibonacci extension level of the first minor wave of that third wave of a higher degree. All right. Another thing that I want to share with you is that if we apply Fibonacci retracement, all right, to the whole multi-wave, which is not easy because there are still data here, but with what I can see on my chart, that's all I can use. But no, there are more data here that we cannot see now, you see. So we are just trading blindly now, all right, but we can only work with what we got. Once the third wave is completed, all right, try to apply Fibonacci retracement to the whole third wave of a higher degree and highlight the 38.2% level. That will help you to pinpoint where the fourth wave is likely to stop minimum, all right, for area wave forecast. All right. So until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about complex area wave count tips, Apple stock waves, technical trading. I would like to take this opportunity to thank the YouTuber PMHCLM, something like that, for asking an essential question. So we see now when the stock are fragmented or consolidated, you see some company will consolidate their share, which means, all right, if they consolidate the share, which means the share was cheaper before, if they consolidate, it will become more expensive. That will change the structure of the price, all right? Then we have to review the wave count again. It creates a distortion. What we have seen for Apple is a fragmented share. The share was more expensive. Now they break it down, you see. All right? It's the opposite of the consolidation of the share. Has nothing to do with the consolidation pattern. So this is why the wave count become complex. This is a complex wave count, and a lot of traders will find it very difficult to count waves, this wave. And but at the end of the day, this is what I'm saying. All right? Suppose your wave count is wrong. Look how the price is within the boundary of the pitchfork tool. So the pitchfork tool is excellent tool that we can use. Even if our wave count is wrong, the pitchfork tool will help us to make excellent trading decisions so we don't end up losing, because the bottom line is not to lose and not to violate the market pattern. All right? Happy trading to you all, and I will speak to you soon. Thank you for watching.